Good morning, everybody. This is Michael coming to you from GammaEdge on Tuesday, November 12th with our pre-market morning strategy and briefing session. SPX game plan has been posted. Single stock game plan has been posted, as well as the market trend model. So make sure you review all of those components and pillars here at GammaEdge. Our three pillars are sentiment, structure, and trend. So we'll start with the trend. We continue to see the CT in a consolidation mode, bolded white line. We have seen some weakness start to creep in as we move below the railroad tracks, as indicated by our tick tag combos in the market trend model game plan. We are still within the colored ribbon, so this is our highly prone to failure area. As we've discussed, overall, red is still below cyan. If the CT continues to live in the ribbon or close to the cyan or emerges, then we'll start to compress this and we will turn into positive slopes. But as of now, we've kind of reached that consolidation stalling area. I think we've talked about it on Sunday. I think we talked about it yesterday in early morning text or commentary back and forth. But we were reaching that 6,000 on SPX. We were anticipating some sort of consolidation stalling with the MTM. So key takeaway here is if you were long ETFs on your short-term time frame swings with our tag combos back here on 11.5. We were discussing those, and I discussed those yesterday. I discussed that I exited significant amount of my ETFs, just taking risk off the table, just where we're at. And now you would be looking to take more risk off the table if you're on a shorter term time frame as the bolded CT starts to cross below the moving averages a little bit. Now, this could quickly recover and go back to the upside. If that does, then we have a new state. We'll have new tag combos, and we'll start progressive exposure again. But if your progressive exposure, if you started entering, 1/3 or 1/4 of your total exposure that you wanted to the market, and you continue to add, this is where you take some risk off. This is where you pull back the reins a little bit, tighten the sails, and we wait for the market to kind of sort itself out. And if it continues back to the upside, then we'll enter those ETFs again or add on back to those ETFs. If we get a complete failure and all the railroad tracks start to turn below, I will be completely flat all of my ETFs. As of now, the bolded CT is under and the railroad tracks are starting to roll over. If we get a complete rollover, then you exit all your ETFs from your entries back here on 11.5 or either 11.6. Again, paper trading and not need financial advice, but if you're following the mechanical portion of the market trend model as you should be, then this is how you would, this is what your game plan would be. So go ahead and jump right into the all expiries, SPXP, call dominated below spot price. We really don't see anything change there. We talked about last Friday in our morning strategy and briefing session, we needed to see some liquidity come in up under price to provide us some stability and some demand areas, and now we're seeing those fill in. So we're seeing speculative OTM puts come in up under spot price, which is good. We need that liquidity to continue to fill in. If you reference back last Friday, actually last Thursday, Friday, I believe, these were in the hundreds, and now we're seeing in the thousands. So that's good. Liquidity is coming up under. It's very healthy. Even if we see transition move down slightly, because of these fillings of the OTM puts, that's still healthy as long as we stay call dominated. And obviously we have these round numbers that we're looking at, these round areas and these larger gamma delta levels that we would look at on any pullback in spot price. So obviously 6,000 is pretty important. 5960 area, 5950, we've talked about that multiple times within the overall price action. And then obviously 5,900 down here would be extremely important. To the upside, we see PGEX, we see INGEX above PGEX due to the JPM here, and then we see 6050 here. That's a pretty important area to the upside that we would need to at least get over and then start looking for OTM call speculation to continue back to the upside. We see COI here at 6,000, so that's very interesting. That's why I kind of talked about that round Livermore number. Or that round and key gamma delta level. So 6,000 is going to kind of be that line in the sand. And in the overall structure and complex, I'd anticipate us to oscillate around that. So that could even include, a 40, 50 point pullback to 5,950 and then back above, and then just kind of oscillate around that 6,000 level back and forth as we traverse the sine wave that we call here at GammaEdge, which is the fear and greed component. Price runs up, We have the greed component of call speculators wanting to get paid for their risk, the OTM call speculators. So they take some of that risk off. Monetization, we see it come back down. We see OTM put holders come up under price. Opportunistic people, as price comes down, they want to get paid for their risk and they monetize. And then we just continue this sine wave around this 6,000 level unless the structure really starts to advance higher, which we'll see in the overall transition, as well as the PGX and COI, and then we'll see it on the delta balance charts also. Delta balance for SPX, right-hand plane, left-hand plane. We see Tuesday that right-hand plane is a weak bear, so that's what I've kind of been discussing. If you haven't noticed, that is the OTM call speculation has degraded a little bit. So what does that mean? Just basically means that the advancement in the overall market is probably going to be dampened a little bit unless we see the volume command come in. And we see significant targeting, volume speculation above where spot price is intraday, 0DT. Now, obviously, 0DT can only take us so far. We need to see those move on out in time with multiple expiries for us to have a significant advance. You'll notice the GEX ratio here. We've had this look before. We've had the GEX ratio advance up. Then we had a GEX ratio consolidate while price went sideways. And then we actually had the price start to come back down. So will we see the same thing? We've had GEX ratio spike up, price spike up. Now we're seeing GEX ratio come down. Those OTM calls starting to drop, which is your numerator. So that drops your ratio compared to your denominator, which are your puts. And then now we'll see if spot price just consolidates or we actually see spot price start to retreat a little bit. Again, just watch this overall day over day. One or the other will happen. GEX ratio will continue to come down, spot price will continue to go sideways, and then we'll reach a tipping point where either spot price or where the GEX ratio will turn back up, spot price will turn back up, or GEX ratio or spot price will come back down and start in a confluence with our GEX ratio. So we'll continue to watch that. The other component is obviously the delta balance. What is happening? We're pegged at +1. So left-hand plane in the money calls are holding and they're very happy with where they're at, but we're just possibly reaching towards that 0 level. So if we start dropping below 0, you may see some of that left-hand plane in the money calls start to erode, which starts to expose the OTM puts. So then spot price can start to pull back. So we'll continue to watch that day over day. As of now, the rest of the week looks very strong in the SPX via delta balance, right-hand plane, left-hand plane. Today, we do see some weakness start to creep in the right-hand plane. So not expecting a significant pullback, just the advancement in the overall market may be tough and dampened. SPY, same thing, looks fine for the rest of the week. Delta balance looks good. Really no change here, but we continue to see obviously the GEX ratio drop, price goes sideways. So one of these will start to turn back up or down. So we'll just continue to watch that. Qs look a little bit weaker, left-hand plane bearish. So that's the in-money calls giving up some of their profits. And we see the dropping here on out in time. We see the left-hand plane start to drop. That gives you the bearishness. We do see the right-hand plane on out in time. Looks like it continues to be above 0. So that's good. But we'll continue to watch this day over day. Dow Jones DIA via DIA looks strong. Nothing changing here. Left-hand plane, right-hand plane, delta balance all looks strong. GEX ratio just the same as all the other ETFs. It continues to drop as price goes sideways. 0DT for today. Drunken Sailor range 60.20 to 59.80. Call dominated above and below spot price. Make sure you're referencing the net stack commands. Really important intraday. That's automated in our channel. Obviously 60.20 to the upside. We've already kind of discussed that. Where we would most likely see some stalling. We know that the right-hand plane is a weak bear today, so the OTM call speculation is not there to drive price higher. ITM call speculation is. So on any pullback down, I think that's an opportunity to get involved in the market unless we see the MTM really start to roll over. Just the call dominated environment is you look to buy pullbacks as long as the MTM is in confluence with how price action is acting. If the MTM starts to roll over, CT under moving averages, and the moving averages start to turn down, then I would just be a little bit more cautious on going long on any pullbacks and wait till the MTM starts to turn back up. That's your tailwind. That means the buyers are in control or taking back control of the market, and that will obviously help any of the long situations there. So we'll continue to watch the delta balance today. inside the range. I would anticipate us really to be inside the drunken sailor range, maybe drop outside just a little bit, but I would anticipate some choppiness back and forth. You see low exposure within this overall area right around 6,000. So we'll kind of be at the mercy of the 0DTE volume and speculation to push us back and forth within this overall range. PGEX, INGEX very well defined, and transition very well defined. So I just anticipate some tight price action, most likely choppiness around this range. +1 DT, call dominated above and below spot price. We do see PGEX up there at 650. 6050, sorry. So again, expansion to the upside for +1 DT, only 157,000 OI as of now, so kind of the low I. And you see the right-hand plane on the net stack command advance to 6050, confluence there with where PGX is at. So we'll watch that. An advancement up like that would be the anticipatory look that price would start moving towards the 6050, but we'd have to carry that through today. Obviously, this is +1 DT looking for tomorrow. This will actually be 0 DT for tomorrow. So we'll see if that holds and the structure continues to look the same for tomorrow. So thesis for today, drunken sailor range. We've outlined plus GEX 6,000. I'd anticipate we got a previous high here last Friday of 6017, so 6020, same area, that confluence we've just talked about on 0 DTE. So I'd anticipate us to come up towards that level, probably see some stalling, reaction, possible pullback, anticipate us to stay within the overall drunken sailor range. Kind of an important price area down towards this 59.70, 59.75, bottom of drunken sailor range 59.80. And then we have COTMP down here at 59.67 for all expiries as of the 4:30 trading view script. So just within this overall price action range, key gamma delta level, I'd anticipate us to really just chop around today. If we do see significant volume come in on the volume command and targeting above spot price, then we could take this 60-20 and start moving up towards this 60-46, 60-50. I'm not really anticipating that today with that right-hand plane weak bear, OTM call speculation really just not present. So we'll watch the price action for today. No, there's 0 P-trans available today to obviously trade if we are doing P2P in the overall portfolio. TC3 is still off, so we would not be entering those anyway today. But not having any candidates in the P-trans to PGX scan puts me on a cautious stance anyway. That just tells me the overall market is not advancing significantly to push those stocks above the positive transition level and to put us in a call-dominated state where there's an opportunity for price appreciation on those individual stocks. So again, caution is warranted. That would be what I would say with the overall MTM. For me, I've reined in my risk pretty significantly heading into today. We'll just kind of wait and see. I think it's post, lots of news and noise last week. People are just kind of waiting, letting the dust settle, which I think that's probably what we should do. Wait for our fat pitch, wait for our A+ setups. No need to push the envelope on the trading. We'll have many opportunities heading into the end of the year, possibly for us to get involved with high probability setups. So, all right, thanks everybody. We'll see you in the Discord in just a few minutes. Have a great day.